The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 23rd Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right now if you'd like, 877-927-6648. If you can't dial in, you can always let your fingers do the walking. You can send me an email like John in Sarasota did. I would like to see that. Steve at TFNN.com. Just inside that subject heading, please put radio show question. And, of course, inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on a magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a flat market. Dow's off 2 points. S&P is up 2. NASDAQ 100 is up 4 points. Russell's down 4 points. Really 3, but sounds cool. 2 and 2, 4 and 4. Semis are off 10 points. That's nearly 0.8% to the downside. Tranny's up 44 points. New York Stock Exchange just slightly green out there. Goldilocks back $13. That's about 1% to the downside. And silver off over 3% to the downside. 53 pennies. Light sweet crude off 16 cents. Not much of a mover or shaker out there as we speak right now. If you look at the leaders to the upside dollar-wise, it's China Lodging Group at $6. That is the dollar leader. That's 5%. You've got AutoZone up nearly $6. That's up 1%. Mercado Libre up about $6 or nearly 2%. Henry Schein up $5, 7%. Lockheed Martin up 1.5% to the downside. It is Prothena Corp down $25. Woo, that's a stinger. 69% with about 11.8 million shares behind it. Alcoa down about $8 or 13%. Another little stinger. The Rope-a-Dope. Roper Technologies down, that's ROP is the ticker symbol, down the devilish 666 at 2.3%. Acorn, AKRX, that's down 31%. So we've got some things moving out here. Of course, I want to look at what you want to look at, which means we should go take a look at John's question. He wrote in, so he says, hi, Steve. I say, hi, John. Where do you see the SPY traveling during the next 2 weeks? Please. The next 2 weeks. You guys, you're really putting me to the challenge out here, time framing it like that. Let's go see if we can identify what the SPY, right, the ETF for the S&P 500, what kind of signals it's giving. So maybe, take out your pad of paper, write some things down. First, if we just take a look at the SPY itself out here, and I don't have what the volume is going to be today. That was, here's what we know about the SPY. Let's take a look at it like this. And the first thing that we're going to know, because I'm going to draw a line out here, let's make it a yellow line. The first thing that I'm going to do, John, and I would suggest that you do the same thing, is just mark on your chart where the actual close of the SPY was at the end of 2017. Now, that price point, that's going to be December the 29th out here. That was our last trading session. And I'm actually going to use the exact closing price for the SPY. And that's at 266.86. We're trading right now at 266.84. Is that a coincidence? Well, I don't know. I don't believe necessarily in coincidences, but it is kind of odd. The reason that I want to have you take a look at that specific number is that when you trade below the actual closing price of the prior year out there, that's giving you a huge signal. And that signal is if you're trading below 266.86, then I can't tell you whether it's the next couple of weeks out here, but it is a prescription for potentially going back down and maybe testing the lows of where you previously were at. In this case here, there would be two of them. Now, we don't know if it's going to be the high or the low. We don't know that it's going to do that, but more often than not, if the SPY is not able to trade above that level, then it says, shoot, that door is open to go test your prior lows. April 2nd, John, that's going to give you 254.67 to 263.13. I mean, this is really simplified, but you would not believe how important such a simple message is in relation to where you are trading versus that of the prior close of the prior year out here. Now, if the market makes a really nice bottom and you're on your way up, you know that's going to be a potential level of resistance out here. The top of the candle session from February 9th, wide open as long as you trade below 266.86. That's 263.61 to anywhere down to 252.92. Now, that takes care of the downside action inside the SPY. How about the upside action? Well, in this case here, if price can close above 266.86 out here, well, then you start taking a look at the upside potential. Where is resistance? Well, inside of the SPY out here, there's really going to be a couple different resistance levels. Let's see if I can find a green line. I can. Let's hope it has price. The first place that, John, you and I are going to look at is going to be the open window or the gap, in essence, to the downside. And that's at the 270.19 area. So we're stuck inside this tight range as we speak right now. That's one level. The next level, there's going to be three out here. The next level is going to be from the gap to the downside on March 16th. And then the level after that is going to be the high from this little bearish engulfing candle from February 27th. So with regard to potential upside targets inside the SPY over the course of the next couple weeks, which you were asking for, if the SPY can continue to trade above, close above 266.86, then you got 270.19, 274.20, and 278.92 as being the levels to watch. Now, here's the key. I don't know that this is going to happen, but here would be your key in the SPY. If price is able to move higher and take out the highs from a few trading sessions ago, that's April 18th, that high is 271.30. And if it can do it with more than 57 million shares, then what you have is a confirmed A to B equals CD to the upside. And that would give you a price projection. Give me a moment here. That would give you a price projection. We're almost there. That would give you a price projection of 282.24. In fact, I would say that would then tell you, John, and it would tell me, that's if this happens. Hasn't happened yet. But if it did happen, then the S&P 500, the SPY specifically, is going to go back and test or maybe even take out its highs from back in January. So that's what I would be looking at, just looking at this one chart here for the SPYs. But when we come back, let's just go check out the horizontal trading ranges for the SPY. Should we do that? And let's go take a look at those TAS market profiles. I'll look forward to your email, your call, your private message, or any message inside the Tigers Den. Steve Rhodes with TFNN. Be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we Tigers and Tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, I'm guessing that there was a couple of folks out there that said, well, you know, Steve, you talked about that A to B equals A to B equals CD to the upside. Is there an A to B, potential A to B equals CD pattern to the downside? And that's an excellent question. I want to thank you for asking that question, as well as I want to thank William in Texas, because John, he wanted you to know that not until price closes below Stevie's red line, which is around the 265.49, the about is the cents, because that number is going to change slightly, but as long as price is above 265, then the upside potential is there. You get below that level, then you're below the December 29th close in 2017. You're below Stevie's red line, odds favor, you know, heading back and testing those prior swing points. But as you and I take a look at this chart here, there is no A to B equals CD pattern that is even in the offing that you and I can look at. The only way that that could really occur would be going out and taking out either the lows of February the 9th. More likely, it would be taking out those lows as well as the lows of April the 2nd, and then doing that with volume. And that's going to be hard to do. Not that it can't be done, but you're talking about 283 million shares from the trading session of February the 9th. That would then get you your A to B equals CD target to the downside. So what the downside has at this stage of the game is a fairly strong level of support. Again, February 9th, you were down with 283 million shares. And the next time you moved lower, in essence, was April 2nd, 186 million shares. So lighter volume. And if that were to keep up again and they move lower out here, you may not get down and test those lows out there, those being 255.67 or 252.92. So there is no lows. Now, I mentioned the horizontal trading ranges. You know, why don't we go take a look at those for the SPYs? And they would look like this. And this, you've got three panels. The blue lines are the daily time frame. The green lines are the weekly time frame. The red lines, or panel number, the panel on your right-hand side, is the monthly. So in the SPY, this, and we're going to take a look at the monthly first out here, because what this tells you, John, what tells everybody else that's watching and or listening, is that at the 254.26 level, give or take a few pennies out here, that is a very strong level of support. What price is likely to do for a while, I don't know how long that while is, but as we start approaching the middle of May and get into the, in essence, unfavorable seasonal cycle, we could be here in this consolidation for quite a while, between 277.71 and 254.26. That's really your trading range. You're at 266.64. Could I possibly recommend that you take a trade right now? Not as a long-term trade. Couldn't do it. You're right in the middle. You're better off shorting 277.71 or buying 254.26 out here. But right now, you're really in the middle when we take a look at the SPY. If you're a shorter-term trader out here, and I were to look for a level of support that you could put your back against, well, it would be the daily horizontal trading range. And some of you out there might say, what do you mean horizontal trading range? That's an excellent question. Here's the deal. When markets move, they're either moving lower left to upper right, upper left to lower right, or sideways. In the sideways, they're really always moving sideways in between a range. What's that range? Well, you and I have either market profiles to take a look at. Those are excellent tools. Or we have these horizontal trading range levels. Inside the SPY, the largest number, I'm going to use this word, co-located, just because I like saying it. That means either an open or close, a co-located, but either an open or close, the largest concentration of opens or closes on a monthly basis is at the price level of 113.56. There were 20 occurrences. Now, this is going back into the 97 time frame. So my data is taking a look at 97 through today. The second largest area of opens or closes, co-located, I just love that, 137.01. Now, we'll just call it 137. 16 of those. So inside the SPY, we know where the largest congestion period is. The cool thing is that sets up your primary horizontal trading range. We can take that value and just simply add it to the top and bottom. And for reasons that we don't understand, at least reasons I don't understand, you probably understand it, but I don't understand, they act as levels of resistance on the way up and support on the way down. Ideally, when you crack through resistance, you crack through it, you come back, you test it, you reject it, then you move up to the next level. It doesn't tell us how long that's going to take, but more often than not, that's what you see taking place out here. Well, now we're inside the current horizontal trading range between 254.26 and 277. That was the monthly. It's much easier to see on the monthly. Now that you have your head totally wrapped around horizontal trading ranges, they're going to be different on a daily and a weekly time frame because the closes on a daily, you've got 5 of those since 1997 compared to, when I say 5, I mean 5 per week versus you only have 1 per month, so you'd have 20 per week, basically, versus 1 per month, and therefore, those numbers are going to be slightly different. Here, on a daily basis, 266.44 is a level of support. We're trading at 266.71. If price is able to get above the 268.22 level, John, there really is no reason why price can't run all the way up to the top of its weekly area. That's all the way back up to those highs. But you already know what to look for there because of the potential for an A to B equals CD to the upside. So there's your horizontal trading ranges. There was a question that came in, which was, what are your higher projection targets for box? Box, the actual equity box, BOX. I'm going to guess that's what it is. Right now, trading at 23.26 out here. So if we take a look at box, now box has only been trading since February 2015, and these monthly horizontal trading ranges aren't going to help us a whole lot. I would prefer right now just to simply go take a look at the market profiles on box. Now, box is breaking out as we see right now. I don't know if this is earnings. I'm going to assume it's earnings since we are into earnings out here. And let's go take a look at the old boxy one. Now, as we take a look at box, this is the weekly time frame. Here in box, what it's doing or what it's trying to do, what it's attempting to do, it's trying to get up and test its all-time high. Its all-time high is going to be 24.73. Now, that was at the actual IPO. Big volume back there, 42 million shares. And that's going to be resistance. Now, that's going to be resistance both because of the big old bearish engulfing candle, although it's almost hard to call it that. This is a weekly chart we're looking at on January 26, 2015, because you really need to, in order for it to be a bearish engulfing candle, you have to be coming from a prior uptrend. And it's hard to say that the IPO was an uptrend, but we're going to give it the benefit of the doubt because what it does is it gives you that 24.73 as a real resistance zone. What we can say is certainly the candle session from November 27th, that was either a bear sash or bearish engulfing candle. And in this case here, that's real resistance. And then we can take a look at the week of February 26, 2018, and that's resistance. The question is, hey, where does price head to if it breaks out of that level? And the answer is, well, what are those Fibonacci expansions from high to low out here? And if we answer that question, we're going to say it's right around 29.06 to 34.56. That's for the boxy one. BOX.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Ruby in the Tigers Den. Ruby wants to take a look at palladium. So we've got the June contract for palladium up on our screen. We're going to notice now we've got 4 different time frames that you and I are taking a look at. You've got 60-minute. That's the left-hand chart. You've got the 240-minute chart, then daily, and then weekly. We could change these to different time frames as well, but those are the 4 time frames, kind of the default time frames that you and I like to take a look at. And we can see on the short-term time frame, now Ruby's taken a trade. Ruby has gone long palladium, got in it this morning, and has a stop below the lows of the session. So here's what Ruby wants to see take place as the next move, because there is a new profile. Now, I don't think you and I talked about profiles per se just yet, just the horizontal trading ranges. Now, these set up some different horizontal trading ranges based upon a bunch of math out there. Of course, everything is really based upon math when you and I are taking a look at it, right? We're talking about A to B equals CD pattern and passing a swing point with volume and so forth. So we're always looking at math. The math here, Ruby, says that what you'd ideally like to see is a close above 983.17. Now, this is on an hourly chart, but your range at this stage of the game is 971.89 at the low end, at the top end 983.17. The structure of this box is neutral, meaning that the center line, that cyan line at 977.53, is basically in the center. So there's no tell, right? If you were playing Texas Hold'em, for those of you that are poker players out here, and you're trying to read your opponent, or let's say you were playing blackjack and you believe that the dealer knew what card it was they were going to throw and you were trying to read them. That in essence is understanding the structure of your TAS market profile will do for you. Here it's neutral, so we can't really say what price is going to do. If you and I go ahead and change this down to a 30-minute time frame out here, we'll see that this profile, the structure of this box, actually has a bullish structure. Now, it says to you and I that 986.22 is the top of its box, and price should test that area because the center line at 978 is closer to 974.05. Now, I don't know what time frame it is that you are trading, on, and you're basing your trading decisions. But at this stage here, you got in this morning, there's nothing on the daily or larger time frames out here, whether it be 240, even if I change this to a 120-minute time frame, I don't think we're going to see anything here. We're not. There's a potential of a new 120-minute profile establishing itself. We say that because there is an orange candle right now. This candle will complete in about 27 minutes. Doesn't mean the new profile will show up. But and likewise, the understanding the tell, meaning the structure of the box, is so important that if Ruby were long, was long palladium at 6 o'clock this morning and saw a close below, this is here, let me just expand this chart so nobody's confused about what the heck is the guy looking at. I'm looking at this chart here for a 120-minute time frame. And when the market came to a close at, it was 10 a.m. So this is between 6 and 10. I always have to remember the E-signal charts. I look at time. That's the beginning of the session versus the end of the session. So at 10 a.m., Ruby, when you saw price, even if you really wanted to go long, and you saw price close below a bullish structured box, which is what happened out here, you knew to stay away because a level of strong support had failed. And you would have said to yourself, nope, I'm not buying into this just yet, even though it was testing a swing point from back here at about between 2 a.m. and 6 a.m. on Friday, April the 20th out here. Is there a pattern to the downside? There is an A to B equals CD. You can visually see that out here. We don't have we might have a hammer candle actually on the, and I wish I could throw this on my other software. I tried to. I couldn't. You did have what is a potential Gartley buy pattern that formed on the 2-hour chart out here, because it does look to me like it is a hammer candle that formed. That's this little red candle right here. It doesn't show up as a candle. It shows up as a bar to me. So, yeah, you've got some potential here. I'm with you. Don't let it close below this morning's low out here. That was your 1 to 1.618 A to B equals CD, and that was on a 2-hour time frame chart. If you take a look at the daily time frame, if you take a look at the weekly time frame, basically if the lows fail to hold, what you're looking at is a move down to the 941 to 948 area before you get your next piece of information. So, Ruby, does that help you out? I hope that it does, and if it doesn't, well, you'll let me know, and we'll go on to, we'll go on to make sure that we do help you out. And Ruby says it is. So 1 hour, the 1 hour time frame chart is what you're looking at out here. So know what's going on below you. You do. You know what's going on below you on a 30-minute time frame, and on the 60-minute time frame, you just really want to see it close above 983.17 to assist you with that trade. Now, there are no other requests that are in. The lines are open. The email lines are open. The regular telephone lines are open. And so what do you guys do over the weekend? Anything exciting? Polar wants to take a look at TLT. We'll do that. Anything exciting? I did a lot of exciting things out there. The most exciting thing I did, this will tell you how dull the weekend was, and that would be total BS because it wasn't the most exciting thing I did. But I did take a few minutes. That's really all it took, 15, 20 minutes, and I went and read the Comey memos. Did you guys go read the Comey memos? You should. That way you don't have to take the stuff that comes from the boob tube, and you'll be able, I would think, in reading those memos, to draw a conclusion that really hasn't been presented by either side of the media out there. Don't believe anything I tell you. Just go back and recheck and do your work and understand these patterns out here. Don't believe anyone. Although I will tell you, I've got your back. I absolutely have your back out there. But go read those. It's easy to read. It's an easy read out there. And it might just make you say, something to think about. Now, we've got other requests that have come in. One was, well, from our polar bear, your favorite polar bear, my favorite polar bear, and that is David White. He wants to take a look at TLT. And, of course, David knows, and you know, because I just heard somebody in my earpiece say, hey, if you're going to look at TLT, take a swig of water. And if you're going to look at TBT, make sure you're looking at that underlying instrument, so to speak. And so that says, let's go see what's going on inside of the 30-year T-bond futures contract out here. And one of the things that you're going to notice, I know Ruby caught on to this right away. And Ruby said, hey, Steve-O, is that a brand new weekly profile that just formed this week inside of the 30-year Treasury? And my answer is, you're right on the ball, Ruby. It is. And if we take a look at that profile level, 142 and 1930 seconds out there, let me go ahead and try to turn price off. Of course, somebody might say, how are you going to analyze a chart when there's no price? It's very simple. Is the brand new weekly box set form bullish or bearish? Exactly. It's bullish. And it says as long as price continues to close above 142 in 1930 seconds out here, that price has as much chance, and a very good chance, to actually run all the way up to 146. Yeah, that's a bullish structured box. Likewise, just like with palladium, if price fails here, polar bear, if price closes below 142 in 1930 seconds, you're going to see a continued move lower. Lower to where? At least back to the lows from the week of February 19th. And that is courtesy of Coca-Cola, sponsored by the one and only Tiger's best polar bear, David.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the next request comes from Ken in Wyoming. I guess maybe straight from Yellowstone National Park. We'll have to ask Ken next time we talk to him if he's, how beautiful would that be? Just Wyoming. You know, just Wyoming itself, but you've got the Grand Tetons out there. You've got Yellowstone and the whole kit and caboodle. But Ken wants to know what's going on with Sabra. I don't know if that's correct. Sabra, S-A-B-R-A. You pronounce it. Healthcare. I got that. It's a real estate investment trust. And the question is, can you tell me what Sabra is showing us? Thanks. Well, Ken, if we take a look at Sabra on just a longer-term basis out here, I'm going to go with the monthly time frame chart. What you're going to notice, I'm going to notice, is it makes that typical longer-term, this is a problem pattern out here. And it does that as prices moving higher, does with less relative energy into the April of 2015 timeframe. Creates that bearish engulfing, and boy, does a chart speak to you in Japanese candlestick terms when you see that unfold at the completion of a pattern. And that's what it did, and it closed below Stevie's red line. So that set up that move to the downside. Now, what we didn't know was where price was necessarily going to stop. But what it did do, and I'm referring to the month of February, this goes back to 2016 now. In February 2016, the cavalry, seems appropriate to say for being on the range in Wyoming, the cavalry arrived. And they did that when they formed that bullish reversal signal. I was a combination of a hammer candle and a piercing candle, and price continued to move higher. Now we're trading back down into that same February 2016 area. If those lows get taken out, you know the old home on the range song with regard to Japanese candlesticks, and that is, if you're long, you're wrong. Now, I'm not saying that's what it's going to do out here, but if it did, then you'd have a huge A to B equals CD to the downside. That A to B equals CD to the downside, well, I say it's huge, but I'll give you the price projection out here. And right now what we know is this is pulled back to a level in an area where the cavalry is. So it should have support at that 1492 area. But if it doesn't, what Sabra is going to do is head towards about 958, maybe even a bit lower. So that's the pattern. It set up that perfect high out here. If we take a look at volumes, let's go see what it's doing from a monthly perspective, Ken, as it's approached that little hammer, that little piercing candle, 13.9 million shares. And we're trading into it from a few months ago. Oh, man, with big volume. 53 million shares the month of February 2018. Not exactly what you want to see, nor was it the type of volume you wanted to see in March. Yeah, it lightened up a bit, lightened up in its loafers, but that was 39 million shares moving into that swing point that only had 13 million shares out here. So what is it doing, Ken? It's doing something that says, I don't think you should really be jumping in on this. And if we take a look at the weekly time frame chart, well, from a weekly perspective, the volume bar, which you're still trading inside of, that happens to be anywhere from 1779 to 1492, and that had 4.2 million shares, and you moved into that on a weekly basis with 17 million shares, albeit you did form a hammer candle right here. That says that February 12th low is muy importante too. That's 1578 is the number, but you're trading below the bottom of its market profiles. I don't see any kind of buy signal for you if that's what you're looking at. Now, on a daily basis, we have seen where this thing has begun to make a try to make a move, but that move was nothing more than a Gartley sell pattern. That's where you take the A point, February 14th. Happy Valentine's Day to you. You move up, you bounce up into a high, looks like February 23rd. You pull down into a low on March the 2nd. You make a 1 to 1.618, A to B equals CD. The cavalry showed up. It wasn't the bullish cavalry. It was the old bearish engulfing cavalry out there. And now you're trading inside that weekly box. Take a look at that profile. This has to close above 1786 in order to maybe get my skirt into a tizzy that says, oh, this could actually move higher. More likely than not, this is headed back to 1670, maybe lower. I don't see anything at this stage. I don't even see a sign of strength coming off of that bounce from February 14th. I say stay away from SBRA. We've also got a question from Danny in Atlanta. Danny wants to go take a look at gold. I don't know what you want to take a look at gold priced in. Do I, Danny? But if we take a look at gold priced in dollars, priced in euros out here, we're going to see it looks ugly. It doesn't look ugly. It just looks like gold continues to trade sideways in both of these currencies. In dollars, that range on a closing basis between 1362.90 to be exact, at 1305.20. You're trading at 1324.70 as we speak right now. Is there reason to be nervous? This is just sideways, boring type action. Although it's a pretty good range out there. Well, $60 range. It's okay as far as the range goes. And inside of gold priced in euros, not doing too shabby out here. I don't know what other information I could really provide for you. I could tell you that the horizontal trading range level of 1089.80 on a weekly basis is a real significant level. It is where gold likes to park its derriere out there. It's one of the places. The other spot is at 968.10. Yeah, there have been 28 closes on a weekly basis at both of those levels. 28 at 1089.80. And 28 at 968.10. Danny wants to know, where is Stevie's red line? What's the time frame, Danny? What's that time frame? You got to tell me what that time frame is, and then I'll tell you where Stevie's red line is at. Of course, that's a strategic pause because I'm looking around the bend. Where is my chart for gold? Here, I've got the continuous contract. This ought to work. Here's the daily basis. Stevie's red line, 1344.70. And not that that isn't important, but you have your price oscillator above zero out here. I think that the key to gold and understanding what's going on is not so much in this case here, Stevie's red line. It's more so just that consolidating pattern out here. So, but you've got the data, you've got what you asked for, and hopefully a bit more. And if you need more, I'll even give you more than that out here. So what do you do? You know, what do you do about Goldilocks as we speak right now? I think the question is not so much, hey, what is gold doing? but maybe more so kind of like what's the GDX doing, or what's the XAU, or what's the HUI? And that's a great question out here. And if we go take a look at, let me try to get this to a daily time frame, because I'm curious myself. So let's go try to answer that. You've got the GDX trading out at 22.48. Is that important? Well, the GDX isn't going to really give us the what I want to show you. Let me see if the XAU, let me see if I can pull that up on my screen out here. My apology for the delay, but I don't have that chart open, and now I've got to go do a little fishing out here. But Ken probably does some fishing. In Wyoming, can you do some stream fishing? Is that primarily kind of like a Montana thing? You know, you go do some fly fishing for some trout. Have you ever been fly fishing? I have not been fly fishing. But I'm fishing right now for a chart on the XAU. I'll have reeled this thing in when we get back from this next break. Got the Dow down 8, S&P up 2. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Saw Jimmy Buffett, William Buffett's cousin. Is Jimmy Buffett related to Warren Buffett? Anybody out there know in Tiger Land, inside the Tiger's Den out there? I think he's just as wealthy as Warren. His voice, 74-year-old, his voice is amazing. really, really good. Yeah, he is. He is. But says Polar says I got one yes and one no. So it's a toss-up there. His voice is nephew. There you go. I think so. Because he's got a very smart business mind out there, and but anyways, his voice is great. The Eagles, the sound was amazing, and you've got Glenn Fry's son is playing in the band, which is very cool. That Vince Gill is kind of filling in on the band, and anyways, always good to see them. They have got so many great hits out there. Those guys, it was like a 4.5-hour concert. They played so much I had to leave. It was just too much, and I can't stay up that late. In any event, the GDX out here. Just to finish off the show, go read those Comey memos. They're very interesting. Very interesting. At least Stevie thinks they are. In the case of GDX, pulling back on super light volume out here, 16 million shares as we speak right now. There was a little gap to the upside, so we'll call that a little breakout area. That's the only way you can term it. That was on April 11th. That was 73 million shares to the upside. Do you rush in and buy it? Tough to say yes out here. I'm going to take a look at the XAU right now since that's up on our screen. Now, let me go back to the GDX. Let me just do that. Even though I went fishing, I caught the XAU. It wasn't really showing me what I wanted to show you anyway, so I'd have to pull up the only problem with the GDX is right now it's trading below Stevie's red line. 2261 is the number. I'd like to see it close back above that. Boy, if it did that on light volume, maybe there's something there. Maybe there's nothing there. The best there would be for gold to get down to the bottom of that consolidation and to see light volume continue inside the mining sector in equities. Hey, folks, thanks for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, Coca-Cola's favorite polar bear. David White's up next. Tom O'Brien, 3 to 5. Hey, I'll be back with Tom at 3:15 just to say hello. Have a great Monday. We'll see you on Terrific Tuesday. Take care.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.